Good morning. In this presentation, we are going to see how we can trade in MCX Copper for this week. Before looking into that, let us see what happened last week. The candlestick which you are seeing, every single candlestick represents 1 hour. Whenever I place the cursor on a particular candlestick, you can see the date below. These double dotted vertical lines indicates the price opening and closing for the respective days. So you can see this black color candlestick that indicates the price opening, and it was around 448. If you see the previous week price action, there is no doubt that copper went for a good bull run. That means copper was completely dominated by the buyers, and we also expect the market to stay in buying, having 442 as the stop loss zone. Till 442 we expect the copper to continue its buying. Now let us see what happened after that. After the price opening, you can see the market came down and tested this 448, and you can see the market cleared. We had marked all the support and resistance zone. The market cleared this 452 and it tried to test this 456, but we can witness there was some support happening on Monday. The market was taking some support. The next day the price was, you can see this long dropped candlestick that indicates the price opening. It was a spiked down opening, but even then after the price opening, the market had got the potential to move up, and again it was staying above 452. So always the market, we can say that it is staying in line with the trend. So you can see that it is struggling to break this 455, and it is taking some support around 452. The next day the price opened where it closed. This is the zone where the price closed and opened on Tuesday and Wednesday. You can very well notice that after the price opening, again the market came and took some support around 452. It was supported by the channels which we are following, a downchain channel and this orange line, and it went and tested this 456. So since it is a resistance, the market took the resistance in, and if you go back and see our presentations which we had posted in our website on those particular days, you can see that we had identified the support and resistance very clearly before the price reaching that zone. So that is why we use our experience in analyzing the support and resistance. If you have any doubt, you can contact us also. So you can see slowly the price, after breaking this 452, and this channel is also entering into the price, and it is causing some resistance. You can see it's causing some resistance, but we still believe, we always use the indicators just to indicate something is happening, but we are the final decision makers. That is why it is called indicator, and we are the decision makers. Just for support we use indicators, and based upon the price action we decide. It is not based upon the indicator we decide. So you can see that there was a pullback. The next day you can very well notice, even the price opened higher, the market found some support around 452. Again it dropped and reached the same zone. What does this complete action means? That if you see the entire price action which is happening, right from the price opening on Monday, the market didn't came down below the price opening. So after the price opening, you can see this is acting, 448 is acting as a strong support. The market is not coming below the price opening on weekly price opening, and you may note it was a very good pullback where the market had provided and closed higher, which indicates that the market was in line with a strong momentum for buying. The next day it is a huge spiked up opening, which means that after the price opening you would have seen the price somewhere around 461 or somewhere else, but again we say we had identified the resistance zone very earlier, and we had marked this 462 as the resistance. You can see the market is struggling a lot to move above the resistance, and that pushed the price down to test the price opening again. So it is very common in any market. So you can see it is a common that after a big opening or big run, bull run, you can see the price to consolidate. And also if you see the entire scenario, the 48, right from 48 it is moving to around 14 points price, 14-15 points price movement for a week with the trend is what we can expect from copper, not more than that. So entirely last week was dominated by the buyers. What we are going to do for this week, so the expected price opening for this week is going to be the same, just above 456. Since we are posting this presentation well before the currency and the commodity market price opening, it may be subjected to changes. There are few things which we need to note and identify before we move into this week, because you may know that before itself we had drawn this trend line on. You can go back to all the archives and presentations which we had posted, and you can see we thought that the market will identify this trend line and it will go in line with the trend line. So now let us see what this trend line means, and this trend line is following and is being followed by the average also. So you can see both the things are converging at a particular point, which means that this zone has got the potential to reverse unless until the price break this zone, and then we can expect the price to reverse. So till then it is likely to stay in uptrend, but since there was a very big price action for the last 2 weeks, market should take rest. Like see that it took the clear rest for 2-3 days, but it stayed in line with the trend, which means that after a run, you can see everywhere in this chart pattern, you can see there is a one big candlestick, then there will be a drop, again there will be a pullback, drop, pullback. So this is called consolidation and or a sideways movement with the trend, but the market maintained the trend. So that is the major reason we always say don't go and trade against the trend. So you may feel that since the price has moved higher, so market is dropping, come on, let us make 1 or 2 points. Sometimes it works, most of the time it hurts. So unless until you get a confirmation, please stay in the market, watch the market and go with the trend. So as a trend follower, we always move and go with the trend, which indicates the trend line indicates it is somewhere around 46-48. So if you can see that last week completely we were following this 442 stop loss, we didn't modify that. So this week we are going to increase the stop loss to 446. So unless until the price break this zone and we get a closing below this, we think the market has got a potential to maintain its uptrend. Just wait for the market, because one more advice is that we cannot do trading always. We should wait for an opportunity. If you had made sufficient profit last week or the before week and made use of the trend, just wait for the opportunity. Don't try to catch the market or do over trading. So over trading is also not good for a trader. So wait for an opportunity. So till this zone, unless until we see a breakdown in price action and a closing below 446, we don't expect copper to move down. So let us see what's going to happen during our trading session and the target zone. Let for example, now the price is staying at if it is opening around 457 or something here, the initial target which we expect is 462, and the next day, tomorrow, we will give the next target. So initially we are expecting 462. Let us see what's going to happen during our trading session, and thanks a lot for watching our videos. Happy trading. Take care. Bye.